Welcome to your gold market analysis for January 8, 2026. We're doing a macro and technical breakdown to navigate today's market. This analysis uses live verified data from investing.com. Please remember, this content is for informational purposes only and is not financial advice. As of today, the gold spot price, or XAUUSD, is $4,423.73. We'll examine what's driving this level. Gold is showing a daily change of negative 0.73%, correcting lower from recent record highs as US dollar strength and rising real yields dominate the intraday flows. Let's look at the high-impact news influencing the gold market today, starting with geopolitical developments. The confirmed capture of Nicolas Maduro in Venezuela is leading markets to price in lower long-term oil inflation risk. Gold's initial safe haven spike has turned into quote-quote sell the fact liquidation, creating a short-term bearish impact. While Greenland acquisition talks elevate long-term geopolitical uncertainty, U.S. macro data was mixed, weak ADP payrolls but a surging ISM Services PMI. The strength in the services sector reinforced expectations of higher for longer interest rates. This is supporting the U.S. dollar and currently weighing heavily on gold prices. The overall risk sentiment is neutral to risk-off, with capital rotating toward the USD and Treasuries. Gold is temporarily losing its safe haven appeal as real yields remain attractive. The US dollar index, DXY, is at 98.89, marking a 4-week high. The strong inverse correlation means USD strength is the primary driver for gold's intraday decline. US 10-year Treasury yields are higher at 4.17%, with real yields near 1.87%. Higher real yields increase gold's opportunity cost, adding further pressure to XAUUSD. Now let's turn to the technical side to define key levels and patterns for gold. The daily trend remains strongly bullish long-term, up 65% year-on-year, but the market is clearly undergoing a healthy correction right now. On the H4 structure, a head and shoulders pattern is visible with the neckline positioned near the $4,420 level. This indicates short-term bearish control. Immediate support levels to watch are $4,415 and the critical psychological level of $4,400. Below these, $4,380 is the next downside target. Resistance for gold sits at $4,450 and $4,466, with a strong area of resistance around $4,500. Considering all factors, let's summarize the overall bias and what this means for today's trading session. Our overall bias is intraday bearish, though the long-term trend remains strongly bullish, supported by central bank demand. The most important level is $4,415. A confirmed breakdown below this level opens the $4,400 liquidity zone and potentially $4,380. Today's combination of a 4-week high in the DXY, rising real yields, and easing geopolitical risk premium points to continued downside pressure toward $4,400.